Alrighty. Alrighty, Doc here from North America. Good morning, good afternoon, and good evening, and a little late. Sorry about that. Let's see, I started trying to get everything up about 4 minutes ago or 5 minutes ago, and I'm running and dancing. Alright, let's see what we got going on. There's the dollar index. Again, they obviously they had a good idea that they were going to devalue. Let me kill my volume too. Volume. Right. There it is. They had a good idea that they were going to change the. Well, they talked about the credit rating. We knew about it was coming. We'd heard about that it was coming, and but it finally happened. Now, no doubt that Fitch is like the weakest of all the like Moody's and Standard and Poor's, and there's another one too. I think it starts with a B. But in the end result is that you can see the pressure on the dollar. You can see it also on the stock market too. Down the S&P 500 down. What's it down? About 17 points. They're putting the pressure on that. Dow Jones Industrial Average is down about 90 points, 95 points, something like that. That pressure is on it. I think they're trying to understand, pretty much where, what does this really mean? Remember, we have Apple and a few other, I guess you could call them guideposts that are going to give us an idea of how the recession is. I like to call it the recession recovery, because I see it as that we're in a recovery of a recession. I don't see it as the other way around, whereas the media and everybody else keeps on trying to guess when we're going to be in a recession. And it's like, we were. Why is it so confusing to so many people? We had 2 quarters of zero growth. That's a recession. We had, that's 6 months of it. We had it. It's done. Forget about it. Now we're at a point now where we're in the recovery, and the recovery is very weak. I guess that's what it comes down to. They want to act like as if we're going into recession, and then we're going to come out of it, and this is just a prelude, when in fact we've already been in the recession, and it's over with. We are now in the recovery, and the recovery is very poor at best. We're seeing GDPs and like 1.5, 2, 1. I don't know. In other words, the third and fourth quarters are the most important. And in other words, they like to look at the GDP, gross domestic product, of the third quarter and the fourth quarter. And here's the third quarter starting, and we're in the middle of it now. So in other words, this will be the second month, but it's only one of the 3 months. So that's what we're kind of like staring at. But this game keeps on going on like, we're not in a recession. It's like we had the recession. How many times do I have to say that to get myself to stop saying that? In other words, it just seems to be absurd. That's what it comes down to. Hello, Z. Let's check out gold. Yeah, gold in a sell. Silver in a sell for a few days. There's the silver. You see that's been in the sell for over a week now. And gold went into the gold sell then and went into a buy for 1 day and then back into the sell again. And the fast is underneath the zero line. They're both in weekly buys though. So I guess I'm saying is that we'll see if this leads. Today's what, Thursday, right? Yeah. So we'll see if this starts to lead into next week as a sell. But one thing's for sure, you don't want to be long. You want to be flat if you're a short-term trader. If you're a long-term trader, you're looking for lower prices so you can buy more. And that's pretty much the name of the game there. And that's going on about. It's been a sloppy, the Federal Reserve, the central banks across the planet. You can see this picture of over on Chicago Quant. You can see how silver just keeps on finding ways to go down. They got it into a weekly buy back in here, just right before the strong explosion. And then the next thing you know is that it plateaus and it doesn't have 2 days of action, and then pretty much it goes nowhere for the next 3 weeks. And here we are, we're back into the sell here, and it's kind of sloppy. It's moving down. The fast algorithm is underneath the zero line, and the same thing with gold. Go back to gold. That's what you asked for, and you can see the pressure on it. It just doesn't. There's just not enough there's just not enough freedom of this price discovery since the central banks and QE. QE is really important in the sense that quantitative easing, the objective is for it to be create stability. And the one thing that money managers do not want to see across the planet is they do not want to see people running in and buying metals. That's like it's like prime objective number one. Don't run in and buy metals because the central bank is going to push it down because they don't want the pressure on the equity market. And money managers, when they see inflation, when they see uncertainty, they like to move towards a little bit more precious metals in their portfolio or Bitcoin or things like that. And it's not what the central banks want. They want people to stay in bonds. They want them to stay in stocks. They want stability. They want, consistency. They want a peaceful market just going sideways and up forever and ever and ever. And that's all they want. And when they sell off, they get antsy. And they notice the markets are going down. You would think that the metals complex would be going up, right? No. The central banks won't allow that. Because if they allowed that, then that would give more energy for the stockholders, the funds, the retirement funds, the investment funds, the hedge funds. And the hedge funds are getting slaughtered. Their shorts are just not winning anywhere near what their longs are doing. And so, or let's put it this way, their shorts are underperforming. So in other words, they're getting trapped. They need their shorts to do better so that it balances with their longs. Instead, the longs are taking off. Their shorts are falling less, and so they're getting squeezed. And that's when you're short something, you want to make money on that as much as you make on your long, and it's not happening. So the reason why you see weak metal complex overall, and we do this too every so often when someone asks about the gold, we're going to show you something. We're going to show you the next 3 years of trading in gold. Let's move it over to you right there and right there. And there's the futures. Oop, messed that up. Let me just do that again. Gold. There we are. And so what you can see there is, you can see December gold here is trading at 1969 as we speak, right there. Okay? That's the main contract. Now let's go take a look at December of next year. It's trading at $112 higher. $112 higher. Okay? Only 2 contracts have traded, and open interest is only 815, but it's trading over $100 higher. 69 versus 81. $112 higher. Now let's go look at December of 25. Trading at $2,154. So now it's almost $200 higher than what it is trading in the December contract of this year. And same thing over in the December of 20, that was 26. So 27 is showing $2,230. So in other words, they can't exercise it. And when they can't exercise something, you're not getting a true value of it. And that's exactly what's going on. And so what you're seeing is, gold being held down at where it gets delivered. So they're keeping the prices way down, a couple $100 underneath the, why aren't they at like all-time highs when we have all kinds of problems? Because the central banks are holding it down. Because they can just print money and sell short the gold, and they've made it hard to take delivery at the same time. But they can't do that to the back months because they can't people won't take delivery of back months. They can't take delivery of back months until the contract expires. So that's the answer to it all in the end. You want to have a real gold contract, bricks won't help you. Nothing will help you, but only a contract that can be exercised literally on the spot. And that's why spot is being beat up really hard because of that. Heading for tea. All right. So there's the answer to gold. Yeah, it's just, I didn't know if you ever watch our webinar or not, Z, but that's what it comes down to. We tell you when someone asks something about a particular product, we tell you what's on our minds and what we can back up too at the same time. We have to be able to back it up. We can't just say, okay, I like it or don't like it. It has to be more than that. I have to make the fellow or female trader that's trying to trade this stuff and commit money and risk to understand how to basically deal with it. And that's what the problem is, because a lot of people here, not right now, but people come into the webinar and they're like, I'm a gold buyer and I don't understand why it won't go up when everything's a disaster. Now, I say I agree, I do, I agree. Let's see how to phrase this. If you would have asked me in 2007 and you would have said, hey, Doc, it's 2007, but we know the future. I said, okay, what's the future? In 2018, we're going to have, or 14 or 2013, the banking industry is going to be destroyed. The real estate market's going to collapse. And government's going to have to do something called quantitative easing, because they need to create stability, because Lloyd's in London now is gone, Merrill Lynch is gone, Santander's gone, Bear Stearns is gone, Lehman's gone, all these major names are gone, what is it, Citibank is basically gone, Deutsche Bank is gone, they're all bankrupt, they're being held up by their countries, being saved by their countries, but they're basically out of money. They went bankrupt from this real estate collapse. Doc, what do you think? How much would gold be? How much would gold really be? I'd say between $5,000 and $10,000 an ounce. That's what I would say. And then they fantasized to the point. Well, what do you think, Doc? If the central banks across the planet come in and buy their own bonds and interest rates go to not only zero, but they go minus. So when you buy a government bond, you've got to pay the government interest to own that bond at the same time. So you're not getting interest for you risking your money. You're actually paying them for your money to be risked. I'd say, well, that's insanity. $5,000, $10,000 easily, maybe even crazier. $20,000. Who knows? When you hear something like that, that would, in 2006, 7, or 5, I'd be like, that's insane. That can't even happen. It'll never happen. That would be an incredible collapse of the world. Well, that's what happened. And what do we see now? We see gold at best in the front month trading under $2,000 an ounce. We see silver trading at 25 or 26. Where's silver now? The thing should be at least 40 or 35 or something like that right now. And its all-time high should be like $100 an ounce. Yeah, look at it. It's trading at $23.62. I think you want to do a yawn on that one. Oh, I'm sleepy. That's what it's saying. I'm sleepy. Nothing's going wrong here. Don't watch the market. Don't look at the enormous debt that a lot of countries are in, and basically cannot afford to even find $20 billion. We saw, I'm going to take this even further for you to appreciate how ridiculous these metal prices are and why it's very risky to try to fight against the central banks right now. We saw in last year, we saw Credit Suisse, a major bank in Switzerland, start to have to pay back debt that they had, and they needed $25 or $30 billion. That's all, $25 or $30 billion in a world now that trillions fly around in every day. Well, the currency went from 90 to 101. The Swiss, it lost over 10% against the dollar over those 3 months until the Federal Reserve started doing swaps with the central bank itself of Switzerland, and then they loaned the money to Credit Suisse, and then Credit Suisse sold off different departments, and they stabilized it. Now the currency trades at 88, 89, 87, I don't know, right around there. How does metal stay this low when you see this level of insecurity, lack of capability? In other words, it's only the central banks that are holding this thing down, because you and I know that it shouldn't be that way. Go try to buy physical gold somewhere. They want way more money than they traded on the exchange. Try to go buy physical silver. Robin tells me that because he likes to buy the stuff physically and trade it around, he has to pay 33% over what it's trading at the exchange. So basically, like if it's $23 right now, he's got to pay something like $31. So it's a really dangerous product to try to, I think it's a good intraday tool, a couple day tool. Use binaries and binary options, or buy gold and park it. In other words, buy it so that you can afford for it to go down. Put it in coins and so forth, and that's the way I look at the metals. But if you're looking at it as a trader during the trading day itself, it's a dangerous product, because you've got this big beast called the central bank looking over your shoulder, and when metals are starting to move, they want them to move down, not up. And that's why our math is, screaming at us on a short-term basis, don't be long, be flat. Now that means just for a couple day traders, a couple days here, a couple days there. But it's telling you that the longer-term trend right now is still in the weekly buy. The fast has broken underneath. Let's put it up on J4X. Where's the mouse at? There it is. And let's put it up on there. And so, that is the real challenge of getting involved in that market. And I love that market. I love metals, and I trust metals. But the problem is, I know that there's this big giant shadow over it, and it's the central bank. Hey, I want know something about why are you using hinky ASCII candles to have a important something important reason. Oh, okay. What we do is we set up. Look at J4X. It's like the way they do atomic theory, where they square it and then they divide it. It's that type of thing. You can see here, hinky ASCIIs match up with my dots. It's my volatility dots and trending dots, and so hinky ASCIIs are about 3 hours behind me on a daily basis, or about 2 hours behind my dots. Let's see, and then we use a fast stochastic, which is the blue, against a slow stochastic, which is the yellow dashed, and it matches up to our algorithm because I smooth both my daily algorithm and my weekly algorithm with a stochastic. So you can see the edge that I get is from my formula itself. And then when I smooth it with things like this or like this, the hinkies, you can see I'm a couple hours ahead of the marketplace, which is, we can give you an example, a live example right now. So let's go to, let's see, let's try one of these. Here is the S&P 500 right now trading live, and it's a intraday. Nope, not that. Right there. There we go. Okay, trading live. Oh, I didn't mean to do that. Let me erase that. Remove. I mean, if you want, you can see gold on an intraday basis the same way. When we break across the zero line here, it's the same thing as when the blue line, where's that mouse at? The blue line breaks underneath the dash line. And in our case, we have a zero line. So when it's underneath, it's telling you to be short. When it jumps across like there, it tells you that it wants to be long. When it breaks underneath again, in this case here, it took a little bit longer, but it broke underneath, and it's been underneath and went down, and it made that low at the same time, and now it's trying to turn up. It looks like there's buyers trying to come in. That's what it's really saying. Now that's a 18,239 tick chart. Silver Eagles 41.44. Thank you, Robin. Yeah, see, Robin's, there's a good example. They're almost, what's that, 42% underneath the exchange rate. It's like, are you kidding me? Or is it 38%? I think 38%. Are you kidding me? In a world like this, why does this constantly, this stupid game go on? Go on and on and on and on and on, and it doesn't let go. It's because the central banks refuse to give up power. That's what it comes down to more than anything else, is that they cannot. Remember, QE, quantitative easing, is designed for only one real thing, and that was for stability. So they don't want whipsaws going on in the markets. They don't want markets swinging. The only time they allowed it to happen is during the COVID situation. They allowed it to swing back and forth because they wanted to get rid of the free puts, the put sellers. And they did. They got rid of 5 funds that were massively selling puts and making billions of dollars against the government or the central bank. And so they let them get wiped out hiding behind COVID. And that's how we were able to pick the V bottom pretty easily. So that is the reason. And then you can see here, matter of fact, here's a shorter term chart. This is changes every few minutes. So it went into the buy right here. Now, we don't pay attention to the dots on something so short term on the intraday. And that was the buy right there. And then you got your pressure up. It's still in a buy. It's still trying to lift. And you can go back and you can see, from, basically an hour ago. Is that an hour ago? 2 hours ago. 1 hour ago. 1 hour goes back here. It goes into the sell right there, and it falls down in pressure. It gets into the buy here. It fights to go up in pressure. Falls below that, downward pressure. Throws this in there, you get a pop, and then back into the sell off of this one right there. And this one rides nicely, for it's a bigger win than the others. Then you got a buy here, and you get a little win out of that. And then you get into a sell here, you get a little win out of that. You get a buy there, you get a nice little win out of that. It falls underneath the zero line, you get an instant gratification of a couple handle move on the downside right there. Jumps back into the buy right here on this big move, a small gain there. And then when it starts zigzagging, it's still in the buy all the way to right there. Went into the sell there, and then it went into the buy. It was in the buy there, went into the sell there, and went back into the buy, and it's still into the buy from, where's it at? Right there. Both the blue and the green have to be on the same side. So in other words, there it was on the same side, there it was not. There it was not. And then it goes into both are, and then it stays in the buy until right there. That's the sell. And then it goes right back into the buy again, the next one right there. I think that's it right there. And then you get that move out of that. Now, did it close there in a minus? No. Yes. No. Did not close in a minus. It's trying to get in there now, and that's pushing it back into the sell. So that's the math. You see it on a short-term basis, intraday, and it works just as well on the weekly and daily. Matter of fact, the weeklies are always fascinating when you really think about it. The trend. Now the blue line represents our fast algorithm. You can see it on the weekly chart right here. Let's go back to gold, and you can see gold has made that deep break that told us there's pressure coming in. You see it breaking the manifold there, and then it breaks the zero line. And at the same time, we're in a daily sell, and sure enough, the product has a downwardly trend. Now, if you're trading binaries or options and so forth, you can put spreads on and have a 9 out of 10 times win out of it. And the only time when you lose is it's a limited loss, and so then you go and have opportunity to make lots of wins again, and they always pay back. So in other words, whenever we get a loss, we get 2 or 3 times more in wins. So it's always a statistical win-win in the end. But you have to do it smartly. In other words, not try to bet the house. and always have your hedges on, like the other side, the binary and so forth, or a stop if you're doing it on an intraday basis with the hard delta. Does that help you out there, Z? All right, now let's see. Robin says every time silver breaches 25, has a coronary. Yeah, in other words, every time it goes above 25, it seems to roll over. All right, now where are we at here? Where did we leave off last? Let's see. Where's my mouse at? There we are. All right, let's go over and take a look at the euro. But, if anybody wants to look at something else, go for it. I'll gladly go look at any product you want to look at. And I always say, there are no dumb questions. There are no stupid questions when it comes to money and trading. The only thing there is a long answer or a short answer. That's about it. I mean, all questions are good as far as I'm concerned. It just comes down to how they'll be responded to. There'll be a short answer or a long answer. Let's go take a look at the euro. Right there. You see this is the daily euro. It's been in a sell for a while now. It tried to bounce, but without the green hinkies, you just have to stand it aside, just let it be. Especially in the fact that it's, when you go and look at the weekly, I think the weekly's now in a weekly sell for a week. Let me see. Yeah, going on a second week. And over here, where is it at? And there it is. Our fast is through the same situation. The slow is not. We like people to follow the slow more, but know that this is occurring and breaking down. When it breaks the manifold, there's weakness. When you see it break the zero line, more weakness. In this case here, it did it last week, and in this case here, you can see we've been in a daily sell for 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days now. Over on J4X, probably the same thing or maybe a little bit less. I think it's 11 days. Let me just go back to it to see. But it's a good tool. It's a great tool it's better than MACD, better than parabolic, better than RSI. It's just a much better tool. Let's see. Let's go to daily. Right there. 3, 4, 5, 6, 7, 8, 9, 10, 11, going on a 12th day. Okay. So it's just a day off of ours. And you see that pressure, and I'm surprised we're getting down to this area to begin with. I guess they're gonna. I mean, that's starting to give me an ugly thing, like a head and shoulders. It's like, what? I thought there was going to be some life in these pairs trades. I thought, we caught the par break. We thought for sure that, when it got to like 101 and was heading down, we got into a weekly and daily sell, and we caught the par break, and it got down into the low 99s. But I'm really surprised that they haven't tried to go test that. This increase or the slap in the face of the debt problem is, that's what they said yesterday. Finch said, debt has gone from 3.7 to 6.2 trillion dollars. That's a percentage of GDP. That's what it is. Percentage of GDP. That's almost a doubling. It's a real freak out. We've fought for decades to never allow that to happen, and here it is. It's happening. We've been in the threes. 3.2, 3.3% of GDP on debt. That's one thing. Now all of a sudden we're in a 6 point something. That's wrong, and that's why the markets are running towards the dollar, I guess. Because the old saying, when America sneezes, the world catches a cold. So that's what the problem is that the world is not growing. It seems like only America grows in these times more. China, they don't have a currency, so there's no real way of being able to tell how well they do. But if you want to really measure China, you have to think of it like a colony of the United States, because if if they're not receiving, buys from us, us buying things from them, their economy just slowly collapses, and that's where they're at now. Matter of fact, I saved an article. I thought it was kind of interesting. Let me show you this article about China. But that's the problem, is that the growth is not there, and so that is a bad thing. We need growth. We need growth, and without growth, it's not good, because the world starves when we go slow. When we're not growing. Let me see if I can find this article. Let's get rid of that. And what they were doing is they were talking to brokerage houses, trying to find a way of perking up their stock market. Because let's go. It's an interesting story. Let me find it here. There it is. There you go. Let me disconnect it and bring it over to the trading platform itself. And that was a curious thing, I thought that was an interesting logic, Let's see. Where is it at? I just had it. There it is. Here it is. Chinese government asks brokers how to boost stock prices. China's markets regulator is asking securities firms how to boost the stock prices. Stock concerns that Beijing is desperate to restore investor confidence. This is a Bloomberg story, citing people familiar with the matter. It says last week the Chinese security. Okay, we already went through that. The IPO cut in stamp duty on stocks trading, as well as slowdown in IPO traffic, help boost liquidity. The people said gave indicators how they plan to boost the market through strategy sessions with brokers, suggesting that Chinese officials are highly motivated to carry out an early pledge by the Politburo to supercharge the national $10 trillion stock market. Okay. Chinese stocks have been weighted down by nation's slowing economy for much of this year, underperforming their emerging market peers at one point by the widest margin since 1999. And CSI Financial is soared 4.6% on Friday, extending gains early this week. But let's see, how much is it down for the year? I guess an index is up 2.3 for the year. That's it. So it's hard to measure China growth and GDP, and it's the same thing. At least when you have a floating currency, it allows for price discovery. But when you don't have a floating currency, then you don't have no idea. So in other words, the currency's been fixed between 6 and 7 now, forever, just like the ruble used to be. And look what happened to the ruble when it was finally floating. It's 77, 80 from 4. Look at the Turkish lira. It used to be 1 to the euro. Now it's 30 to the euro. So when you have currencies that are being controlled by their own governments, it's not a positive thing to try to do price discovery in other products in that country. So in other words, we all have to agree that it's not worth 7 yuan to the dollar. It's more than likely like 20 or 30, something like that, which would cut their economy into a quarter of what it is now. And that would make sense to me, because if it wasn't for the Americans buying $200 or $300 billion worth of goods every year, no one else is buying that. Their country would collapse. So it seems kind of crazy why they treat us pretty nasty to begin with. You would think that they would, it's like, don't bite the hand that feeds you, but they do. Anyhow, that is that. So now from there, we'll go over to the British pound and see what's going on there. And there is the British pound. British pound's in a spiral down, just like Euro. Not as bad, but I mean, it's one thing surprising. It broke the 127 area. Where is that at? Let's put it up there. Right there. There it is. And as you can see, it's been in a daily sell now for 6 days. Same here. Is that 6, 3, and 3? Yes, 6 days. And the fast has been underneath all last week. Excuse me. And most of this week. So, so we had good heads up not to be long in this area, even when it went into the buy here for a couple of days. It was like, oh, okay, maybe they're going to bounce now, but no, they slammed it again. Put it into the sell for the next 6 days, and and again, remember Finch is a paid organization, so they probably had their clients heads up, letting them know we're going to devalue the rating of AAA to the United States, which we showed yesterday. There's only 2 or 3 companies in the world that have AAA ratings at this point. Used to be when I was Polina and Janos's age, it was a whole different game. There were dozens upon dozens of major corporations, General Motors and Ford Motor Company and General Electric and Minnesota Mining, 3M. Let me think what else. Johnson and Johnson and Pfizer and now I think it's something like odd. Like we looked it up. It was like Google and Johnson and Johnson are the only 2 AAA companies now, corporate bonds. So the United States has fallen to a AA plus, which is there's probably hundreds of AA pluses of the major corporations now. It's not the worst thing in the world. It's just that that's a good question. What corporate? I'm going to see how many corporate bonds are AA plus. No, not that. Not that. There we are. Let's see. Bonds. We looked this up yesterday for AAA. What does a bond rating of AAA mean? Let's see. Okay, here we go. Just a general idea. I imagine there's dozens of them. What difference? No, I don't care. U.S. government bonds. Yes, we know that. Bond credit rating. Let's see. Okay, here we go. So, we're looking at what are we looking at here? Alcoa aluminum. Let's see. Allied Signal. It goes on. I can find Amoco Gas Corporation. Let's see. It's Atlantic Richfield Oil Company. It just goes on. I'm looking through a list of hundreds of them now. Caterpillar, manufacturing of the machines. John Deere. General. Let's see if General Motors is a AA plus. They may not be. General Motors is not. I didn't think it was because they went out of business and they're not exactly doing that well. Let's see what Ford Motor Company is. Ford Motor Company is A1, so it's like a A plus. General Motors is not even rated. Let's see what General Electric is. GE is same situation, just an A. That's about it. So it's all part of the process, and at the same time, as I said, remember Finch gets paid, so their customers probably had a good idea that they were going to downgrade the United States soon. They've been talking about it for 6 months now. Every so often I'd mention it here in a webinar. Now there's Swiss. You can see Swiss is trading at 87.60, 63 to be exact. Let's put it up over here. So you can see the weekly trying to climb on the fast side. The slow is still dragging its feet. It's been in that sell since up here in the 91-ish area on a weekly sell. Let's take a look at it right here. Where are you? Swissy. Dollar Swiss. Dollar Swiss. There it is. And so you can see we're at the top end of the range here with those. That's the other thing, that this goes up to zero, goes 0 to 100, whereas ours would keep on just going. It's an open-ended thing there. Let's see, what else can we say about that? All right, so that's the situation we're in globally. From there, we'll jump over to the yen. Let's see where the yen is. Right there. Holding strength, but it is down a little bit today. You can see it's at the high end of its range, 91 and change. And at the same time, over here on Chicago Quant, we're in the same situation. You can see it is down a little bit. Right there. And going after its daily sell. And it's trying to get into a weekly buy. It's been in a daily buy from here. And so we were in a weekly sell, so you can't really take the long. You just, or unless you're doing it through binaries, options and binaries, you can, because you won't get stopped out. Whereas if it's a hard delta, you get stopped out, and the next thing you know, a week later, it's right where you wanted it to be. So it all comes down to the vehicle, how you get long or short. That's what we're always talking about, all these subjects here. We're not here to trade, we're here to make money. That's the key to the game here. All right, from there we go over to the Turkish lira, right there. There's Euro Turkish lira trading at 29.54. It's been in a daily sell now for 3, 4, 5, 6, 7, 8. This is the 9th day. You see we're buried down at the bottom. And then on a weekly basis, I think they're threatening, they're threatening the weekly number as we speak. Yeah, they're not yet. But they're trying. Yeah, it's rolling over. It still hasn't turned red yet. Over here on Chicago Quant. Let's move that to there. Mouse here. Right there. You see it's trying to get to the zero line, same as right here. Just waiting for the hinky to turn red. And because the blue line is now for the last 2 weeks, I guess you could say last week and this week, is underneath the dashed line. And it's been in that daily sell for a bunch of days. 3, 6, 9, 11. So 11 days in the daily sell. 3, 6, 9. Okay. What else do we got here? From here we go over to we're waiting for the August 22nd to 25th BRIC conference by the BRIC nations, and seeing if they're going to invite Mexico into the BRIC. So we've been following the BRICs that way. We've been looking at the strongest BRIC down to the weak. We don't really look at the weak ones. We don't, because they're just so weak that there's nothing really to learn. In this case here, the number one BRIC in the world, as far as we're concerned at this point, is the Mexican peso, which has been roaring against the dollar, gaining enormously. Remember, when it's going down, it gains against the dollar. Last couple of days, last 3 days, it's been in a buy. The weekly is trying to get up after being in a sell since almost the 1840s area. It fell all the way down to 15. Did it fall to 15? Was it 1662? So it was a nice move on the downside here, and it's trying to lift up now. That's the most powerful BRIC of all. If they accept the Mexican peso as a BRIC, it'll be the number one BRIC. They're like 4 or 5 million barrels a day in oil, large workforce, bordering the United States, lots of business. Matter of fact, they exported to the United States more than China did last year. They're very strong. So from there, let's put that up over on J4X too. There it is, King Peso. Just kind of going losing against the dollar. I guess it's interesting that everything is jumping to that Finch situation, All right, now from there we move over to where do we go next? We go over to the second strongest brick, and that is the South African Rand, which is where the conference is going to be. It's going to be held in South Africa. And so you can see that's been... let me take a sip of tea. Oh, that feels better. And so South African Rand, when it's losing against the dollar, usually gold is losing too at the same time. And that's what we're seeing in the gold market. You know, when we go back to the gold market here, or silver market, either one of them kind of represents it. See, it's been on that downwardly slope, as this has been on the upwardly slope. Upwardly, downwardly. You know, that's usually the way it works. Let's see, what else can we say about the South African Rand? I guess that's about it in the sense of, let's put up on the screen here. Right there. Right there. And fastest through the zero line. Slow is trying to make a move into it, and we've been in the daily buy for 2, 4, this is the 6th day now since down here. And that kind of matches up with the gold. And it usually does. If you're a gold trader, pay attention to the South African Rand. I'm going to put a piece of gum in my mouth. A little sore throat there. All right, now from there, we go to the last of the currencies that we look at. If you would like to see a currency, let us know. If you'd like to see a 4-hour currency, let us know. Okay? And so you see right here, there is the Canadian. Canadian normally, it's been odd. This is losing against the dollar right now. When it's going down, it's gaining against the dollar. Now, at the same time, normally, when it's gaining against the dollar, oil is usually rallying. In this case here, it seemed to broke away right around in this area here. You can see that it's been on an upwardly slope for like 4 weeks now. And when we go and look at West Texas Intermediate right there, you can see, it's been climbing, and this has been climbing. That's not the way it's supposed to work. It's supposed to be going down. Now this is breaking down, and now it's climbing. That makes sense, but the thing is, it ran from the 68 area up to the 82 area, and this product only found ways to go up. It did adjust for like 4 days, and then it pooeyed. And it did it right with this stuff there too. So it is kind of odd. But, we trust that about 65-70% of the time, whereas up until the political problems that occurred in South Africa going into New Year's last year, South African Rand was like clockwork. When we saw the South African Rand in the morning trying to rally and gold did not, you could buy gold because gold would turn around. It was almost like 99% all the time. It seemed like it led. The currency always led the metals market, but not anymore. It's sloppy. So something about hundreds of thousands of dollars, millions of dollars in the president's office has been found, and there's no explanation. They wanted him to resign. He refused to do that. So I don't know. And because of that, it seemed to mess up that really, really neat situation. Yeah. So from there, we go over to, where do we go to? We'll go to finish off the crude. Let's look at, is it crude? Yes, crude. So I should have gone into gold and silver, platinum, and copper when I was with South African Rand. So let's just finish it off. Here is crude oil. It's trading at, that's gold. Right there. Went into a daily sell yesterday. Made a new low, but now it's trying to bounce back. It's trading at $80.20. And the back month of November is trading at $79.42. Which makes it, was that 58 and 20, 78? So it's gained a little bit here. It's losing the supply and demand. People are not really reaching for it at the moment. The front month is starting to fall back a little. Less interest in it, I would say. All right, from there, Let's go to Nat Gas. There's natural gas in the United States, trading at $2.50, basically $2.55. And let's see. Over here, we're going to put up the energy company, thinking that maybe it's trading at the $27-20 area out of Spain. That gives us a flavor of what the cost is of natural gas in Europe. Let's see, where's it at? Right there, yeah. 26.25. Okay, so they're really backing off. Interesting. I thought it had been $1 higher. It was up around 28 yesterday. At one point, it was at 27.5, and I thought, okay, they'll take a quarter out of it. No, they've taken out almost a whole dollar. So that's good. It's it's a good thing for Europe to see natural gas lose its explosive costs. All right, from there we go over to copper. There's copper. Copper went into the sell 3 days ago. It's starting to back off. Going back into the weekly sell. It's trying, at least. It's not there yet. Then let's put that up on J4X too. Where are you, copper? There it is. 2 days in a sell there. Now let's take a look at platinum on Chicago Quant, our platform there. Right there. Third day in a sell. And the weekly is holding up very thinly, but the fast is broken totally. So you can see that pressure that's there. If the slow joins in, oh my goodness, that could be really negative for metals altogether. It seems like they follow the platinum, but the thing's discounted by $1,000. It's really odd. So, all right, traders, this is Doc from North America. We will catch you all tomorrow, same time, same channel. And this is Happy to Hump. Oh, this is Thursday, so tomorrow's TGIF. It'll be end of the week. So, come on back. We'll go through other things, whatever you're looking for to learn about or talk about or tell us about or whatever. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Thank you very much.